Our next guest says he expects prices to resume their downward trajectory. Again, Capital founding partner John Kilduff joins us on the CNBC Newsline to discuss why. If they're going to keep cutting, why are you bearish on prices, John?
Because first of all, and good morning, Sarah,
morning.
their track record on this stuff is just poor. And, you know, part of what the rancor was about delaying the meeting was the recalcitrance of the OPEC African country producers. Cheating is their middle name when it comes to these situations, OPEC that is. And I've joked that they're like dieters around a dessert table in terms of trying to hold together and comply. They don't have a good track record with it. They are getting squeezed by the United States and other producers in terms of market share in Asia, which is the only growth area right now. And China, as we know, their economy is struggling. You could use the word mightily, and it's just not producing the kind of oil demand gains and rebound from the COVID situation that was expected. So they have a big problem on their hands, not only from the demand from China, but again, the United States position of 13 million barrels per day of production, exports when you throw in refined products of 10 million barrels a day. So, you know, they have their hands full, and it's just, to me, not going to prove to be a winning strategy for them.
But the Saudis seem pretty intent on getting prices higher.
Yeah, I've used the word hellbent on getting the prices higher. The problem for them is that, in my opinion, they're at their maximum cutting position. You know, they're producing only 9 million barrels a day. Again, contrast that with the U.S. production of 13 million, exports down to 7. Contrast that with U.S. oil exports of pushing on 5, not quite there, but pushing on 5. So you see the problem the Saudis themselves have, and they were awfully close this week to burning down the house, if you will, and saying, okay, let's have at it, and like they've done many times over the past decades in terms of making it a battle for market share rather than market control.
I wonder if you think that the Israel-Hamas war at all has any impact in the increased tensions. I mean, a lot of these countries in the world are watching closely, obviously, on the sidelines of whether that changes the OPEC dynamic or discussions at all, just because it's all happening at the same time.
Well, I think, in fact, up until the Hamas attacks, there was rapprochement between Saudi Arabia and Israel, other countries as well in the region. And Saudi Arabia is even trying, remarkably, to bring Iran into the fold. There are reports that the Saudis were offering them foreign aid in exchange for backing away from supporting the Houthis, Hezbollah, and Hamas. So I think Hamas miscalculated here in terms of their support among the Arab nations, although the Arab nations aren't going to abandon them completely. They certainly aren't coming in on their side in terms of any kind of warfare, which the oil market has expressed its sigh of relief by lowering prices after that initial spike higher. So I do think that's part of it. I think the Saudi goal, and I don't blame them for this, is that they want higher oil prices so that they can build out their dream of a diversified economy, the NEOM project, and other entitlements that they see as their right in terms of, you know, trying to hold together and keep the oil price at a place where they can, you know, benefit from it.